FirstRand's profit rose to a record, this even after increasing provisions to cover potential compensation and other costs linked to a long-running probe into missold car loans in the UK. The lender saw high-quality growth in earnings and improved returns in its large domestic businesses. FirstRand CEO Mary Vilakazi joins us now for an assessment of that performance. Thank you so much for your time, Mary. Now, FirstRand really highlights achieving pleasing outcomes despite a challenging year. Just paint a picture of the banking group's outperformance, and particularly in South Africa, which is an economy that's characterized by sluggish economic growth.
Thanks for having me. I think we shared that before the additional provision we took this year, earnings were up 16%, really testament to the quality of client franchises that we have in the group. FNB has seen a much better performance this year on the back of households starting to experience a bit of easing. I mean, with high interest rates, high inflation environment last year, I think it was quite difficult. So we can see that 125 basis points of rate cuts starting to be supportive of households, something that is encouraging. And as we look forward, our commercial business in FNB, again, doing very well. We're very pleased with the progress. In particular, we are making in SMEs. We've got about 1.2 million SME customers at the moment. About 250,000 of them are in the informal economy. And actually, that has been, I think, a good source of growth in the year. And if I turn to RMB had a much better second half of the year from where we ended, supported by the private equity business. And that more than made up for the global markets business, which was softer this year. WesBank, I think we're very proud of actually what that business is being able to achieve. So despite, I think high interest rates, WesBank has managed to make sure that they are partnering with car manufacturers that are now bringing in cheaper cars, so that we're seeing a lot of cars from China. And so when customers have wanted to buy down, they found WesBank Finance there. And then lastly, in the UK, our Aldermore business, the numbers are always there's been a lot of noise because last year they released some provisions for certain events, and this year there's some raised. But I think if you just look at the clean performance, they're up 2% and actually are executing on the strategy that we have agreed on to make sure that they're improving returns. And in this financial year, we are celebrating the fact that they've just paid their first maiden dividend since FirstRand brought Aldermore in 2018, and they've paid a dividend of £125 million. So, so very pleased overall that our franchises across the geographies and customer segments are all doing well. So I think we've got enough momentum, I think, going into the financial year.
Okay. What's interesting is that, of course, you mentioned this easing of the strain on the consumer. And of course, we look at that from the lens of lending. Are you seeing that across the board, across your lending book? But also, are there any notable shifts, lending shifts or dynamics that are playing out considering increased competition there?
So if I look at mortgages, I'd say our mortgages book grew 3%. We saw growth last year after the GNU from about July to October. Then I think things slowed down considerably, particularly in Gauteng. And then we saw a pickup now in this last quarter. So I'd say from about May, we started to see a bit of a pickup in houses, probably less than below 5 million rand. So, so this the first pickup, we think it was just confidence coming back post the GNU. And then we actually think that this particular improvement in the cycle is because rates are considerably lower. So hopefully this is also a lot more sustainable. In retail unsecured, we've seen, I'd say, muted growth because just customers have just not had the capacity, given where rates were. And so I think if you look at WesBank, it's still the same retail customers, but I guess South Africans are prioritizing they're prioritizing making sure that they've got vehicles. And I guess we saw a few years ago that people were holding on to their vehicles much longer. And actually, when they did buy a new vehicle, it was at a cheaper rate.
Yeah.
And I guess Bank has been able to capitalize on those two factors, which is outside of system growth.
All right. Well, let's cross on over to the UK, Mary. In the results, you mentioned absorbing a further accounting provision for the UK Motor Commission matter. What has that entailed?
I mean, that's a probe into the UK motor industry, and which the regulator, the FCA, announced last year. Hence, we set up that first accounting provision last year. And then there were lots of other court cases that were making their way, where ultimately we ended up with cases that went all the way to the Supreme Court. So I mean, we're very pleased with the Supreme Court ruling because that provides a lot of legal clarity. Also happy that we were able to defend our reputation, I think, because, you know, if it's your name that is actually being quoted, that's a lot. That means a lot to us. So now what is outstanding is the redress program as the regulator had announced last year. And we increased our provisions because based on the information that's transpired, it looks like it might be wider. But I mean, where we sit, I would call what we provided a conservatively struck accounting provision. And it's not that that's the money that we actually intend to spend on a redress scheme. If the FCA sticks with their commitment to the fact that the redress scheme will be fair and proportionate.
Yeah. All right. Mary, just as we wrap up the conversation, I mean, there's been a very, very interesting conversation happening about the exposure of South African banks to the rest of Africa. And a lot of them have really had a keen interest, putting a lot of energy in the rest of Africa's strategy. This comes with geographical expansion and rejigging their areas of focus. Is FirstRand participating in this additional interest on the continent outside of South Africa?
So, I mean, our broader Africa portfolio, we are in 8 countries outside of South Africa. That portfolio this year has delivered earnings of 5 billion, so it's not small, at an ROE of about 23%. And this is actually in a year where the global markets performance impacted the results. So it's not small, and we've been invested in growing customer franchises. You can see our customer numbers are up. Our deposit franchises is growing strongly. So we've got operations in those markets. We are big in 3 markets, Botswana, Namibia, Eswatini. And in the other markets, we've got opportunities to scale. And actually, that's really what we are more focused on. And we've always wanted an additional presence in Kenya. We just haven't found the right entry strategy yet because the regulator doesn't want to give greenfields licenses. So we keep waiting for the opportunity that will come. But otherwise, we're quite happy with our portfolio, and we're quite happy that there's a lot of runway. And I think just growth that we can still derive from our portfolio. So I guess there's a lot of activity on the continent, because remember, some of the international banks have actually pulled out of the continent. So I guess there are opportunities for South African banks, and yeah, we will, as we do everywhere else, compete, and we'll try and make sure that our franchises are strong.
And really quite interesting that you mentioned Kenya specifically, as of course a lot of conversation has been on East Africa, with Kenya being the crown jewel. Thank you so much for your time and giving us more insight on those numbers, Mary. That was Mary Vilakazi, CEO of FirstRand.